In trading, the biggest losers wins. What does that mean? A stop loss trade doesn't mean it's a loss trade. You might be wondering why am I saying all this? But in case you see me for the first time, my name is Gordon Trace. I show up here with my knowledge to help you become profitable going forward in 2025. Now, this video is one of the best psychological video you will ever come across on the internet, right? And if you are seeing this video, you're about to just get profitable in the forex market. All right, now in forex trading, a lot of people don't want to take losses, right? And losses is part of the game. Now the reason why a lot of people are scared to take losses is because emotions is involved. The moment you put your emotion in trading, you're going to have negative bias, you're going to have sleepless night, you're going to have that time where your chart might be running but your mind is not at rest. So if you want to become profitable going forward in 2025, learn to detach your emotions from trading. And one of the way you want to do this is by reducing your risk to the barest minimum. All right, the market has potential to give you money, right? There is no amount of money that the market cannot give you in the forex trading, right? But you have to manage your risk. That is the only control you have in the market. The moment you press that buy and sell button, you have no control again in the market. Now, the reason why we set stop loss is because we've been able to admit the fact that yes, I can allow this particular percentage of my account to go. A lot of people set stop loss, but psychologically, they've not accepted the risk. You're still trying to see if the market will move in your direction or not. No, the moment you put in that XL, make sure you close your laptop or go do something else and allow the trade to run for you. If peradventure the market stops you out, that does not mean you've taken a loss trade. What does that mean? It's just that you've stopped a loss, right? You stop a loss from further losses. Now, a stop loss trade doesn't mean that you've lost a trade, right? It's just that you stop a loss, right? That is why we call it stop loss, stopping your losses from becoming bigger, right? So that does not mean you lost the trade. The trade is still valid, right? And sometimes this is the reason why if you have been hitting Excel back to back in the year 2024, all right, and beyond, 2025, you want to see what you've been doing wrong and focus on this concept. I teach these in my Inner Circle Academy, but I'm going to give you one for free. Learn liquidity, right? What does that mean? Liquidity fuels the market. Liquidity is one of the reasons why you see a lot of momentum buys and momentum sell. That point you enter is that point that is called inducement, all right? Now, in liquidity, you want to look out for two things, your POI and an inducement, okay? Now, I need you to start thinking like the market makers, all right? The moment the market or the price is coming to your point of interest, two things will be happening. The market will start creating inducement for you, making you to enter firstly, right? And liquidity grab will happen. The moment there's a liquidity sweep, which is your stop loss, then that is when the market makers will now move in your direction. I'm sure you've seen those trades where you're looking for sell, all right? And you've positioned your stop loss just above the recent high, and the market sweep you out, then go into your direction. Why? Because that point that you use as your entry point is actually an inducement. And what is the meaning of inducement? An inducement is that first what's market movement to enable you enter so that you can believe that you've entered in a good trade, but not knowing that it was a forced arrangement of the market makers to make you in early so that they can sweep you out, the market to move in your direction. So if this has been happening to you past years, you want to focus on how to trade liquidity. Learn to understand how liquidity is being formed, how inducement is being formed, and how you can identify that point of interest where you want price to come to you before you actually moving to the direction, all right? So for the purpose of clarity, I want to show you my chart so that I can let you see how I'm able to wait patiently for my trade setup, all right? And how I'm able to avoid liquidity grab so that I can enter at that point where the market makers are also coming in the market, right? And if you want to learn more of this, be a part of the mentorship, right? The link to join us is in the video description below, all right? Let's go right now. All right, now if you look at this is GPP, JPY, right? Now, if you look at the structure, one thing you want to identify is the structure, right? Now, if you look at the market just broke up below this channel, right? This is a channel, right? You can see we have higher highs, higher lows, right? Now, what happened? Market broke below this channel, all right, and start coming down, right? This is what we can see on the chart. Now, our structure will make us to understand the type of market entry we want to do, the kind of buyers we have. So right now, if I'm going to be looking for sell entry, I'm going to wait for a particular entry trigger to happen. Right now, on the daily time frame, this is on the 4-hour time frame. I've done this analysis initially before. This is the low that the market recently formed. Right, price got to this low, right, on this support and haven't broke it yet. So if price will be breaking it, and how am I going to be going in for a sell, right? Because I'm anticipating that price we still have to push down here before going up. Because if we look at the overall trend, you can see that this chart that I draw here, these lines are points of diagonal support, resistance, and support, right? Support. So price have to come here before going up. Right now, these are internal structure that we are trading right now. So let me quickly show you on the 1-hour time frame. Right now, if you look at it properly, you will see that price got to this level right here. You see a double top here, right? And this is where our sell occurred from. Right now, what happened? Price broke below this level, created a support here, a resistance rather, then boom, right? You can see. So now let's scale down to 15-minute time frame. We've seen our structure. We're looking for ways to buy and ways to sell rather. And if that did not happen, how do we go in for our sell, right? So this strategy is combining both technical analysis and smart money together. If you look at it properly, there is an order block here, right? This is a protected high that markets have not yet come to take, right? So right now, this particular high is protected, right? Because we just left this particular high to form this one here, right? So now, what is happening right now? Price failed to break below this support, right? Now, for those who are waiting for pullback, who would have used Fibonacci retracement, would have want to go in here for a sell, right? And these, you are just trading internal range liquidity, right? So whatever you are taking a trade here right now, this is what we call an inducement, right? Now, a lot of people have entered here for a sell. Why? If you can look at this week rejection, some are in for a sell. So the moment you start seeing this consolidation, is a sign that the market makers are building out. They are waiting for you to get in really hard, so that they can sweep you out, before moving to your direction, right? They can just sweep you out from here, boom, and go into your direction. That is liquidity sweep, all right? Because here is your stop loss. This is where you have put your stop loss, right? Now, like I said, you need to identify your point of interest before you want to go in for a sell, right? So before you get to your point of interest, a lot of two things must have happened: inducement and liquidity grab. Now, this is inducement, right? Price coming here, all right, people entering here is an inducement, right? But for just technical traders, they believe they can go right now. Now you start seeing some little of movement, like lower low, lower high, all right, letting you to go in, right? And before you know it, price will just come back, take you out, right, and move into your direction, right? I might be doing a detailed video on liquidity. So if you want that video, put it in the comment section below, and let's take this video to 100 likes before I can do that video. That will encourage me more to go in depth into explaining liquidity and the types of liquidity that we have, all right? So you can use both smart money and technical analysis to make good money for yourself going forward this year, 2025, all right? Now, this is my point of interest, right? So I'll be looking for price to come here before I go in for my sell, right? Now, with that, this is where I'll be waiting to go in, right, as a what, smart money trader, all right? Because right now, what is happening right now, a lot of traders are coming in. Some would have even used trend line, all right, to make sure that probably they are in the right track. You can see, and before you know it, now you just have a what, change of character come up here, then price, boom. So I'll be waiting patiently to see this happen before I can go in. My stop loss will just be a bit above this recent high, you can see, and this is how to have a protected what, trade. And going forward, you can take one trade and make good money. This over one is to 7 risk to reward. You can see, because by standard, this is where the market is heading to. But here we just be our first TP, which is over 1 is to 2.7, and our second TP will just be here, 1 is to 7, right? Now, the market reward patient traders. If you are not patient enough, the market will easily take you out, right? So this is what I see on the chart that prompted me to quickly do this video for you, to be able to understand how to avoid the market makers palaver, right? If you're doing this, right, if you had gone in here, you see the market takes you out, and you see how the market makers are watching your trade, or probably the broker is after you, it is you that do not understand liquidity, right? Liquidity fuels the market. So the market makers are waiting for people to get in here, right? Before you know it, it takes that stop loss and move into that direction without them being the trade, right? So if you love this type of content, put it in the comment section below. I'd like to relate with you, and if you find value in this video, try and like it and subscribe to this channel so that you'll be the first person to be notified the moment I drop good video like this. I'll be doing another video, in-depth knowledge about understanding liquidity and how you can take good positions waiting for liquidity to sweep or grab, right? If you love that kind of content, make sure you take this video to 100 likes, and trust me, I'll be dropping these gems. Thank you for staying to this particular time. I'll see you in my next video. God bless you.